All right, today we're jumping into the little book of common sense investing. And its big idea is, well, revolutionary. In a world that's always pushing complicated financial strategies, what if the absolute best way to win is to just stop playing their game altogether? Let's find out how.
So let's kick things off with this incredible quote from Warren Buffett. It feels kind of backwards, right? We're always told that to get ahead, you've got to be active, you've got to make moves, do something. But what if, in the investing world, doing less actually gets you more? This one single idea, well, it's the key to everything we're about to talk about.
To really see why doing less is the secret sauce, the book's author, John Bogle, tells this really simple story. It's a parable about a family called the Gotrocks. And trust me, it's the perfect way to understand how the stock market really works once you strip away all the jargon and the noise.
Okay, so picture this. One family, the Gotrocks, owns literally everything, every single company in the country. Now, they're not trading stocks back and forth with each other, they just collectively own American business. And as those businesses grow, as they innovate, as they pay out dividends, the entire family gets richer. Together. It's all pretty harmonious.
And here's the most important part. By just owning the businesses and getting their share of the profits and the growth, the Gotrocks were playing what Bogle calls a winner's game. I mean, the whole economic pie was getting bigger and everyone was getting their slice. It's a game where pretty much everybody wins.
But then things got complicated. This super simple winning strategy was about to get completely flipped on its head. So how do you take a game that everyone is winning and turn it into one where almost everyone starts to lose? Well, in come the helpers, the brokers, the money managers, all the financial middlemen. And they start whispering to some of the Gotrocks' cousins, saying things like, hey, why settle for just average? We can help you get a bigger slice of the pie than your cousins. All you got to do is start trading your shares. Let us help you pick the winners and sell the losers. And boom, that is the switch right there. The winner's game was all about owning businesses. But the second the Gotrocks started trying to outsmart each other, they began playing a loser's game. See, before the helpers showed up, trying to beat the market was what we call a zero-sum game. For every winner, there had to be a loser. But here's the thing, the helpers don't work for free. So now, every single time the cousins traded, the helpers took a little piece. They charged fees for their brilliant advice, they took commissions on the trades, they had their operating expenses. And suddenly the Gotrocks family, who used to own 100% of the pie, found that their total wealth was actually shrinking. The pie itself was still growing, but the helpers were carving out a huge slice for themselves before anybody in the family got to take a bite.
Okay, so let's bring this out of the parable and into the real world and see just how this works. Bogle calls this the tyranny of compounding costs, and it's all based on what he calls the relentless rules of humble arithmetic. The math is actually super simple, but its effect, it's absolutely devastating.
And this quote right here, it gets to the absolute heart of the issue. We all love to hear about the magic of compounding returns, right? How your money grows over a lifetime. But what we tend to forget is that costs compound too. And that compounding is like a destructive force, constantly working against your wealth.
And this chart, wow, it shows that tyranny in action. That top bar, that's what the market gives you. Let's call it an 8% return each year. But that bottom bar, that's what the typical investor actually gets after costs. Let's say you pay about 2.5% in fees, that drops your return all the way to 5.5%. And over time, that little difference, it doesn't just add up, it becomes a massive chasm.
Over 50 years, on just that one initial $10,000 investment, that seemingly tiny little fee gap results in a shortfall of over $323,000. Think about that. The financial system, the helpers, who put up zero of the capital and took zero of the risk, they walk away with almost 70% of your potential return. That right there is the tyranny of compounding costs made real.
So if trying to beat the market is a loser's game, one that's basically designed to make the helpers rich, what's the solution? What's the way out? Well, Bogle's answer is just beautiful in its simplicity. It's the core of his whole common sense philosophy.
He came up with something called the index fund. Bogle himself described it as just a simple basket that holds many, many eggs. So instead of trying to find that one magical golden egg, an index fund is designed to hold all the eggs, to simply buy a tiny slice of every company in the market and then just hold on.
Bogle had the perfect way of putting it, with his own little twist on a classic saying. See, trying to find that one-in-a-million fund manager who can actually beat the market year after year, well, that's like looking for a needle in a haystack. The odds are just stacked against you.
So what's his common sense solution? Don't even bother looking. Just buy the whole haystack. Own the entire market through a low-cost index fund, and you are mathematically guaranteed to do better than the vast majority of other investors who are busy paying those expensive helpers to search for that needle.
So this brings us to the final and most crucial point. This all sounds great in theory, right? But how do you actually do it? How do you put yourself on the path to winning the winner's game? The strategy is just as simple as the idea itself. Step 1, you buy a low-cost, super diversified index fund that owns the entire stock market. Step 2, you hold on to it. Forever. That's it. You tune out the noise, you ignore the crazy ups and downs of the market every day, and you let those relentless rules of humble arithmetic work for you, not against you.
And that really leaves us with one final fascinating question to chew on. The logic here is pretty much undeniable. The math is simple. Bogle's strategy is just pure common sense. So why is it so uncommon? Why is there an entire multi-trillion-dollar industry built on convincing us to do the exact opposite? Now that's something we're thinking about.